Okay, a very good morning to all the attendees. We'll be starting with tutorial 2, which is on automated trading using API. And it will be delivered by Jagdish Chakole from Symbiosis Institute of Technology, Nagpur, and Manish Kudhekar from VNIT Nagpur. So the theme is about automated trading, and which is much more efficient and accurate than manual trading. And here also, like in other domains, the automation has played a significant role. And there's a term called algorithmic trading, which is very much used in particular domain. So the tutorial will go through different aspect of this algorithmic trading, how to use that, the Python APIs for that, and related things. So over to you, Jagdish and Manish, for the tutorial.
So thank you. Thank you very much for the kind introduction. So I'm Manish Kurekar, and I have my colleague Jagdish Chakole, and now presenting a tutorial on stock market trading through APIs. And many of the things would be, we can say, you might already be knowing. The only thing that we are doing today is basically how to do this plumbing of the existing resources. So how can you do back testing of the existing data? How can you do trading using the APIs? How can you build algorithms that decide when basically we have to take three decisions: buy, sell, or hold. So how do you decide that? How do you validate your trades? How do you make sure that you get good uh, good returns on whatever bets you have made, and how do you quantify that? So we'll be doing a basic kind of an overview of entire this thing, so that we kind of present it as a product end to end, and that might be of interest to some of you. And what we'll be presenting most probably is the aspect of the trading which is available to the common person. So, algorithmic trading, as you know, is mostly dominated by the big players. Someone who can do microsecond, picosecond kind of trading, who can do scalping of the prices, looking ahead at how the prices move. And so there are lots of papers, lot of algorithms available in this domain. Lot of people, basically what we call as quants, working in this area. But what we are trying to do is, like, if you are restricted to one trade a day, how will you do that? Okay, so we are looking at retail customers as our focus. And our focus is that if you don't have that kind of bandwidth, if you don't have servers installed next to the servers of the exchange, if you don't have bandwidth, which is basically the delay, which is almost going to nanoseconds between the price that is being decided and that at the price at which you are trading. So here we go. We'll do some basics of stock market to start with, so that we have the same vocabulary, and then we'll be doing the presentation. Okay, we'll present one cute learning algorithm that we had used successfully, and uh, then we'll do a live demo of how the trading can happen. Okay, so start the presentation, please. So please feel free to interrupt anytime if you have any questions. Yeah, yeah, thank you. So coming to basic vocabulary, so the whole idea is that this financial domain is very rich in terms of the kind of data that is offered. So we have 1 minute data, 2 minutes data, 5 minutes data, daily data, all types of different frequencies data is available, and that too, the data is very, very, very accurate. So the missing data are very low, the kind of errors are very, very low. And so when you have such an accurate data, can you do something better than you do in other domains? So that is the first thing. So trade frequently, but smartly. Um, Ideas typically last for months, because if you have a successful trade and people can figure out what you're doing, they can also code it, right? So it is not a very big deal to kind of. So you have to be constantly on the run, right? And math CS equally important. Okay, so this is the motivation. I think this is the most second point, the most important. Stock markets live and historical data is available. There is very high quality data is available at a very low cost. Like you just require 2,000 rupees to subscribe for say Zerodha data engine, so that it provides you the tick by tick. That is, the moment the trade happens, you get the information. So that's very cheap. Okay, thank you. So, so one of the things that is typically told in stock market is that there is this random walk hypothesis, which says that the stock markets cannot be predicted; they move randomly. But then this is the 2006 paper. We have this referenced it at the end as well. So this paper says that when human emotions are involved, the typical upside is slower than the downside. So people panic more often than they are exuberant. So what we see in stock market typically is that the stock prices go slowly up, but they come down very fast. And this has been proved very conclusively in this paper, and we have referenced that paper, and that is what we'll use. The next thing is that today, as of today, this quant, being a quant, is very much um, a career that is very effective, and we have seen that this is this year's salary. So 4 crore plus is a kind of salary that is offered. Okay, so the assumptions that we have is that we'll not look at the what we call as the company data sheets or the factual information. We'll just go by data. We'll And when we go by data, we typically are doing short term, because in the long term some event might happen. Anybody to buy or sell, right? So we know that we need take the three trading decisions typically. These are the only three things available: either you buy, or you sell, or you hold. Okay, and I think a technical analysis versus fundamental analysis. Technical analysis is the thing you do with the data. Fundamental analysis you do basically by looking at the company track record, who are the managers, who are the directors, who are the held, what industry it is in, and so on and so forth. So that is the fundamental. Okay, one of the things that we'll look into is this back testing, which is basically a term that is used so that whenever we have historical data, then we can analyze that data and come up with a strategy and look at that strategy and say that how good or bad that strategy is. Okay. This is not working. Hey, work nahi kar raha. Just check that. Yeah. Okay. So these are the slides which you have kept, but I think this everybody knows that if you want to expand business, you raise money. Stock market is one of that ways to raise money. Instead of going to bankers for money, you can raise it from the stock market. Then the companies, why people will invest? Typically, long-term investors are looking for dividends. dividends you give from profits. Okay. And the other thing is that if the company is doing well, not only you get dividends, but you also get money, appreciation of from for your money from the stock market, because if the money company is doing well, the stock will rise. Okay. And so the more people want to buy the stocks. Okay. These are the two stock exchanges, NSE and BSE, which enable online trading. SEBI is the regulatory authority, and these are typically the stock market participants. So, and this is how Nifty chart typically looks like. You have high, low, uh, previous high, previous low, and so on. Then we have three trading decisions: buy, hold, or sell, and either you can buy first and sell later, that is called as long buy, that is called as long, which is buy first and sell later. And when you sell first and buy later, it is called as short sale. In uh, in the Indian stock market, you if you do day trading, that is you basically you basically decide at the end of the day your position will be what it was previous day. That is uh, that is called as day trading. You can buy or sell any number of stocks, but whatever you have done, you have to basically do the opposite thing by the end of the day. Trading, selling first and buying next is allowed in Indian stock market. Okay. That is not allowed uh, in long term purchases. But if you want to do buy and sell for few in the for a long term, then there are other things available, that is futures and options. Okay. Okay. So, so fundamental analysis has quarterly reports, annual reports, and so on. And then technical analysis has other things like moving averages. There is supports, resistance, momentum, relative strength, and so on. These are the candlestick charts, and many of you must have seen these candlestick charts appear when you look at any stock. So you can have a candlestick which is in green when the stock rises, so it has all the things. And similarly, when the stock falls, you have a red stick. Okay. And the major stockholders are promoters, foreign institutional investors, domestic institutional investors, retail investors. We are focusing on the retail investors, where typically the a transaction size is less than 1 lakh rupees. Okay. Okay. So typically you have an uptrend, which is also called as a bull market, when the stocks rise, and when you have a downtrend, it is called as the bear market, when the stocks fall. Okay. And then there is a sideways trend when much nothing much is happening. Bull versus bear market is the typical thing. So when the stocks rise, so bulls are the brokers are of two types typically: people who make money when the stocks rise, and the people who they are called as bulls. People who make money when the stocks fall, they are called as bears. And typically, apart from what is happening in the fundamental things, the stocks move because of the actions of these big players. Okay, because otherwise there is no reason why Infosys stock should rise 5% or 2% from yesterday to today. Nothing much has changed. Because of these people's activity, the stocks go up or down. Then there is one other important thing, that is order book. An order book has prices, the buyers and sellers list, and the person who is offering the highest price is listed on the top. And then there are first 10 buyers, and then similarly the person who is offering the lowest seller price is on the top. And when they match, the prices match, the transaction happens. Okay. So obviously we are trying here build trading strategies, And we know that manual or human trading and algorithmic trading are the two major things. And one of the factors of algorithmic trading is HFT, that is high frequency trading, and that is something that most of the quants people are doing. But we are not focusing on that. We are focusing on retail investors, retail customers. Okay, what is the benefits of algorithmic trading? The most important thing is that it builds in a discipline, because traders' emotions are eliminated. When you buy, typically you don't know if the stock is going up, you don't know at what point you should sell, and a typical mentality of a trader is that. So they don't know what is the high point, and they wait for higher and higher, and they never sell. And when it is going down, you typically book losses and come out. So retail investors typically loses money in the stock market, because lot of sentiments uh, overshadow his decision making. Okay. Okay. So what are the problems typically? Like disadvantages, you have the models are not reliable, because you don't know what is the good data set that you should look into. Then static trading is not reliable, because once activity is done, once a model is discovered, everyone can replicate it. Okay, and so on and so forth. So uh, there are many uh, trading strategies that have been applied. One is pure statistics based approach, which is you must have come across this ARIMA and HMM models, which are basically time series. You treat the data as a time series and then try to predict the future time series. Okay, then obviously AI machine learning based approaches like ANN, CNN, decision trees for a random forest. We will focus on this reinforcement learning, typically the Q learning part, and my colleague Jagdish will be telling how we have used that, and what are the results that we have received from that. Okay, so over to you, Jagdish.
Okay. Okay, thank you, sir. So, sir has created the background for this topic. So, in every trading strategy, basically there are only three things: we can buy stock, we can sell stock, or we can hold stock that we have earlier bought. So, basically, every trading strategy, so the performance of every trading strategy is depend on when we buy and when we sell. So, there are various logics. You can figure out when to buy and when to sell based on historical data. You can use machine learning model, or you can use the traditional trading strategy. Okay, so what we have did, we have used reinforcement learning. Our agent will interact with the stock market and he will learn the environment, and based on that our agent will take the decision, means either it will buy or sell, or it will hold the stock. So for that, first briefly discuss what is reinforcement learning. So I hope many of you are aware of because about the reinforcement learning. So in reinforcement learning, there is environment and agent. So environment consists of set of state, and agent also has some action space. So agent interact with the environment. Before interacting, it sends the environment by the state, and base of state and its policy is take the decision on the environment. Once you take the decision, once you take the action on the environment, is receive the reward. Reward can be either positive or negative. Based on that reward, the policy is updated. So that is the basics of reinforcement learning. So these are the terminology that we use in reinforcement learning. So basically, we use reinforcement learning for in a problem that is involves sequential decision making. In stock market also, we take sequential decisions. So this that is MDP, Markov decision process, that is also that used to formulate environment for the reinforcement learning. Basically, MDP is used to represent the sequential decision making problem. So these are some terminology in MDP that we will discuss. So Markov property. So Markov property means the next state is dependent on only present state. Okay, it is for depend on the historical data. Means current state is sufficient to what we can say predict the next state. That is Markov property. Then this is a state transition matrix. So from current state to next state, there is some probability. Suppose there are n state from state 1, the probability for state 2, state 3, stage 3 for a particular row, it should be sum up to 1. So this is only probability from current state to next state. And Markov process, you can say it is a set which consists of, or it is a tuple which consists of set of state having some probability, that is state transition probability. In Markov reward process, there is 4 component, that is set of state, transition probability, and reward function. So reward function is based on the action taken by the user on a particular state. Okay. So there is a difference between return and reward. So basically, this G, capital G, it is a return. So when an agent perform action based on some state on the environment, it will get an immediate return. That is denoted by capital R T plus 1. And next returns are the future returns. And we are considering that future return by introducing some what we can say discount factor. So this capital G is an accumulated return considering the future return also. So this V is a value function. This function, this is a state value function. This tells us if you start from particular state, how much what how much value or how much return we accumulated return we will get. And this function is governed by Bellman equation. So for a particular state, that return is equal to the immediate return plus future discounted return. Okay, so we have used Q learning in our one of the strategy. So I will now discuss that Q learning. So in Q learning, that is the mapping, that is the policy mapping between the state and action is implemented using a Q table. Okay, so initially the values that row belongs to state and that column belongs to action. So for a particular state and particular action, we have some Q values. So while training, we have to learn these values. And again, this Q learning table or updation of this Q learning table is again governed by the Bellman equation. So this last equation is responsible to update the values in that Q table. So initially all the probability or all the values from a particular state for various action is equal. So initially we will explore our what we can say environment. We randomly take action. Based on action we will get reward and we will update that values, and slowly we will reduce our exploration and we will increase our exploitation once our Q learning table becomes saturated. Okay. So in Q learning, there is a agent and environment. So our agent is interacting with the environment and it is learning which action to take for which state. And this equation is responsible for updation of the table. Now we have developed one strategy by using this reinforcement learning for trading. So these are our problem statements. So basic problem statement is the static trading strategy is not workable always. It should be dynamic or it should be updated. So as in reinforcement learning, the online learning is happening. Every time the agent interact with the agent, its policies, every time the agent is interacting with environment, its policy is updating. Second is people has used many forecasting approaches to predict the price of the stock, and based on that prediction they have developed some trading strategy. But the value of the stock is based on various factors, and majority of these factors are uncontrolled or unknown. So prediction is next to impossible in case of stock market. So in reinforcement learning, internally there is prediction, but it is not direct, it is based on the reward. Second, our trading strategy is not only based on the reinforcement learning. People are using the traditional trading strategies, and that strategy also working. So we have combined one traditional trading strategy and reinforcement learn based trading strategy. So the traditional trading strategy we have used, that is trend following trading strategy. So in case of trend following, when the trend is going up, we try to buy, and when the trade is going down we sell. That is the well known traditional trading strategy, and we have combined this traditional strategy and reinforcement learn based trading strategy. So basically how we represented our environment. So what we have taken the daily close price of the stock, and we have taken the daily close price of last 15 days. So our state space will become continuous. As our state space is continuous, we cannot use that basic Q learning strategy, because for to use Q learning we required finite state space, but our state space is not finite, or we can say it is not discrete. So instead of table, we are using neural network, deep neural network. So our deep neural network is a mapping between state and action. So rest is same. It is just like a Q learning, but table is replaced by the deep neural network. So this is our representation of the state, that is 50 closing price and action space. So as we aware of, in stock market we can buy stock, hold stock, or you can only sell stock. So this is our proposed model. So our trading agent is getting input from the traditional trend following trading strategy, and also from that reinforcement learning, or we can say that mapping between state and action, that is provided by that deep neural network. So agent is getting two action. Based on that action, he is deciding his modified action, and he is taking action on the environment. In return, he will get reward. Reward means once you buy a stock or you sold a stock, counterparties, you will get profit or loss on next day or next session. So that we have considered as a reward, and that based on that reward, our trading agent, its updates is trading, what we can say, its policy. So policy means mapping between state and action. So we have only three state: buy, sell, and hold. So this is our experimental data. We have performed our experimentation on Indian and American index stock, and this is our performance of our model on what we can say Nifty index stock. So we have compare our trading strategy approach with the traditional buy and hold approach, and that supervised learning based, that is decision tree based trading strategy. So our trading strategy outperform these two known trading strategy in terms of percentage accumulated return. And this is the performance of three models on all four different data. So in every case, the proposed model is better as compared to that decision tree and buy and hold based trading strategy. Okay. So in a, in the context of trader, he has to take only two decision, either buy, sell, or do nothing, that is holding. So it is based on its own knowledge or it's based on historical data. So the traditionally the stock trader use the charts that in the previous slide we have seen the candlestick. If a single if we consist of sequence of candlestick that form a pattern, and based on that pattern they find out whether the next session the market will goes up or down or it will be stationary. So logic can be anything. You have to only simply decide either at this point you have to buy or not. You can use traditional logic, that is traditional trading strategy, or you can build some trading strategy based on historical data and deep learning, reinforcement learning, or any algorithm that you know. That is fine. So once you develop that logic, you can manually you can generate signal and you can manually trade, okay, or you can automate. But automation has its own advantages because we can track only 2, 3, or 5 stocks at a time. But if we do this by coding, we can track entire stocks listed on a particular stock exchange or more than one stock exchange. So many brokers, that is what we can say stock broker, has provided API to facilitate the algorithmic trading for retail investor. So for some traders are Upstock, Zerodha, and there are many different. So for today's purpose, we consider Zerodha, and they are providing this algorithmic trading to retail investor on subscription basis. And for that, there is a module that is Kite Connect. So we will explore this. So first, you have to create a developer account in Kite Connect. Then to enable this algorithmic trading, uh, we have to subscribe this API, and now for a month they are charging 2000 rupees for that API. And also we require historical data, live data, tick data, 1 minute data. 1 minute data means suppose a SBI stock is current price, 1 minute before price, 1 minute before price, that is called as 1 minute data. Frequency can be 5 minutes, 10 minutes, 1 day, 1 month, one week. So based on your trading window, means how short you wanted to trade, you can use any frequency of data. But to access that data, you have to again subscribe, and they also charge 2000 rupees for that subscription. Okay. You can automate your trading strategy in various languages, in Java, in Python, in MATLAB, but I have preferred Python. And there are various editors for Python, so I have used Jupyter Notebook. So first, you have to install this Kite Connect library. So you can easily find the documentation of Kite Connect by using that pip command. You can install this Kite Connect library. Okay, and to generate a session, to create a session with that server and our machine, we have to use this API key and API secret key. So hope you are able to see there is word API key, and follow that below that there is a key that we have to use while connecting with the server. Below that there is API secret that is unique to every user. After that, So using this API key and this method, we have to generate request token. So what we have to do here, this is URL. Here you have to open and paste this URL in browser in and enter your credential. In response, you will get response token. So I have highlighted that is response token. So our aim, so here I have got this response token, and by using that response token, I will generate that is access token. We required access token, and access token is a function of request token and API token. Once you get this access token, it is valid for 24 hours. So this is my access token. Once you get the access token, you can, by writing a code, you can buy stock, you can fetch your account, whatever you can do manually, that we can automate it. So there is a function. So I have placed order. So there are various kind of order. Means you can say cash and carry, limit order, or a market order. So there are various you can say parameter. By providing the appropriate value to the parameter, we can decide which type of order we are actually raising. So here I am placing order for Nifty. Okay, so this is what we can say my Jupyter notebook, and this is my actual account. So that order is placed. Also, in our demat account or trading account, we have some position, we have some holding, we have a fund. So we can access all this, and based on that, we can that data we can include our trading strategy. So as discussed by sir, there is a order book. Means suppose for an we can say Infosys, at a particular time the market is open. So there are various parameter associated with that Infosys stock. Suppose I'm considering Infosys stock, means current price, then how many buyers are trying to buy, how many sellers are trying to sell at a current instance of time, and how much volume they wanted to buy, how much volume they wanted to sell, and what is the difference between that. So whether the price will goes up or down, that might be decided by this factor. Suppose 10 people are wanted to sell and 100 people are wanted to buy, then definitely the price, logically the price should increase. So that information you can get from what we can say order book, and this is the information. What are the parameters printed here? These are the data from the order book. Based on this data, you can develop your trading strategy. So what I have received is just a Python dictionary. From that I can extract any information. So this is the last traded price of the Infosys stock, is not today, a week before. So my point is, based on your logic or based on machine learning, reinforcement learning, or any stuff that you know, you can do data analysis on the live data or historical data, and that data you can fetch using these APIs, and based on that you come at a particular point or come at a particular decision, and you can execute that decision by placing order or closing order. So by using that, you can make any trading strategy. So again, I have placed some order, and that is reflecting on my actual account. Sorry. So back testing. So what is the actual use of back testing? Whatever the trading strategy you have thought or we have come up. So what will the is performance on future? That will the only future will tell. But what is his performance on the historical data, that we can figure out. So that is known as the back testing. write a code for your logic and apply that on historical data. So that is backtesting. So we can do in algorithmic trading, we can easily do backtesting. So there is a strategy that is this is a traditional strategy that is commonly known strategy, and their strategy is known as moving average crossover strategy. So I hope all of you aware about the moving averages. So in this strategy, that is moving average crossover strategy, there are two moving averages. So smaller moving average and larger moving average. So smaller, I have taken for example 20, n equal to 20 as a moving average and n equal to 40 as a moving average. So there is common belief that whenever the shorter moving average crosses the larger moving average in upward direction, so price generally goes up. So we have to find out, this point is buy point, and whenever the shorter moving average is crossing the larger moving average, what we can say, top to bottom, at this point generally price goes down. So that is common belief. So we can write code for this and we can check whether this is working on historical data or not. Again, is this 20 or 40 are optimal or not? Means shorter moving average should be 18, larger moving average should be 17, like such kind of stuff. So you have to figure out the optimal values for smaller moving average and larger moving average. So you can try and error base you can figure out, or you can use a, what we can say, genetic algorithm or any algorithm which provide the optimal value. So I have tested this strategy on SBI data. So it is a daily data. Again, using my that credential, I have downloaded this data. So this 1 day data. 1 day data means this row belongs to a particular day. So open, suppose a daily data means today's open price, today's close price, today's high price, and today's low price. If the session is a day, if session is a 5 minute, if within that 5 minute, open price, close price, high price, and low price, that is I am referring as a session. So I have collected this daily data, means every information is for a particular session, and length of that session is a day. Based on your strategy, you can vary that length. So 1 day data is freely available from Yahoo Finance, we can download. But the minutes wise data or tick wise data or 5 minute data and live data, that is not freely available. So that you have to subscribe to data vendor. So what I did, there is a column closing price. So this is daily closing price. Then I created a column for moving average of 20, moving average of 40, and to know where they are crossing or not, what I did, if the smaller moving average is greater than larger moving average, then write 1, otherwise 0. So when there is a transition from 0 to 1, if this column contains first value is 0 and second value is 1, it means the moving average is crossing, smaller moving average is crossing to larger moving average. And if it is 1 to 0, it means the smaller moving average is crossing the larger moving average from top. So again, I have taken the difference, n minus means t minus its previous value, and that is the difference. If it is +1, I will buy. If it is -1, I will sell. And I have written my logic and I executed on that what we can say SBI data. So I have taken only one stock. So at this point I bought the stock, and at this point I sell the stock, and these are some transaction. So we can accumulate this, and my accumulated result is this. So I am getting some positive profit. So by this way you can check your any trading strategy on historical data, that is backtesting. So now we can discuss how actually, now the time is roughly 10 and market is live. So we can do this on actual data. So for this, I need to connect this my computer. So I require 2 minutes.
So, meanwhile, if there are
यही
any
कनेक्टेड है,
questions,
मेरी स्क्रीन शेयर हुई है.
yeah.
सॉरी, ये निकाल देता हूँ.
So this through these APIs we can do whatever we can do manually. So currency trading, futures trading, options trading, everything is possible. Yes, we have tested our algorithm on options and it is working badly. Yeah. So we need more testing on options. We need to find. So what we are trying to do on options trading is that we are trying to develop a whatever we can think of. These are not working. Now we are trying to do it using genetic algorithms based. So we are trying to define a like in genetic algorithm we define a genome, and each part of the genome has some meaning, and then you can mix and match and do this crossovers and other things. So we are trying to develop that, and so that we get a strategy which through this whatever standard strategies there that are there, those we tried mix and matching, it's not working. We are trying to encode it as a DNA and use genetic algorithms to do trading in options, and options is a very complicated thing, and it is very interesting. That's the reason, because it that is very much amenable to this automated trading, because options, tracking those options, because options are available at various stages, and there is a decay factor, there are other things like Black-Scholes equations comes into play. So encoding that everything is really challenging, and there is nothing available as far as I know in retail domain as of now. So it is basically a startup idea, since that if someone does it and it does it right, so someone, I think nothing is available in the retail domain as of now. For retailers, no such automated trading available for options.
But you can code that trend following strategy also, similar to that index option.
Yes. Because finally, options are the base is the current price of Nifty or whatever it. Let's say if you are talking about Nifty options, then the current price of Nifty is basically the price on which the options are based. Right. So again, it follows that.
So does the
So we have some thresholds, in the sense that if we have made profit after of a certain percentage, then we treat it as a reward, and those rewards are also leveled, like low rewards, medium rewards, high rewards. We are using reinforcement. So we tried with reinforcement learning. We got fantastic results as far as the stock equity trading is concerned. No. It is only for equities. No. Commodity is something that we ourselves are not much aware. But we are now trying it for options, options and futures. Basically options. And options, it is not performing well. So we are trying to see, we don't know, we are trying to analyze why this is not working, and what we need to do to improve.
So does the presence of pseudo orders significantly affect the performance of the algorithm?
Presence of
Pseudo orders, like trader makes an order but does not buy it at the end of the day. So
yeah, actually, yes, because if you see 99%, nowadays 99% of the trading is happening through bots, all algorithms, and most of the trading is happening by large houses. The retailers typically are very insignificant now, and what we are seeing is that these bots, because they are algorithmically trained, uh, whenever the rules, they have stop loss and make profit kind of rules enabled. So the upside and downsides are typically bounded. But if it breaks that bound, then it falls like a precipitation. Like we have seen the stock market falls or stock market gains. So either there is no move, but if the move happens, it happens very sharp. And this is a typical thing that happens with traditional trading, not traditional trading, the algorithmic trading.
In kite, what we feel that like whenever you want to have data for let's say put or call, right? So in kite, you won't get the option like once this one expires, like every Thursday the call or put option expires, right? For weekly, I'm just talking about weekly options, right? So how will you get that OHLCV data, right? You were saying the open, high, close, low volume data, right? For SBI. So similar that, do we get also like put call data, put like volume and everything for put and call options into this API?
Yes. So for put and call, let's say Nifty is currently at 17,000. Let's
Okay.
assume that. And we are say doing a put for 17,500.
Okay. For last week, let's say before 2 months, I want to see the data of.
Yeah. So a put option is only live for 3 months.
Yes.
Right. So we get the entire 3 months data, how the put option has moved, and how much there the vocabulary is open interest, right? So how much open interest is available, right, for that particular put is there, that we can get from the historical data.
And do we have also option like you were saying about pseudo orders, right? So
Pseudo orders we don't have any.
Okay. Okay.
We get only.
So we can't put that pseudo orders in the part of modeling, right?
No, we can't do that because that is not available. So we get snapshots of the order book. If the pseudo order is available there, then we get, but mostly it is not. So
for like latest 20 orders, we get the order
we
value,
just
right?
get first 20 orders.
So even that one is available for the coding, right? If you want to use that to top 20 orders, right?
Yes. So order book snapshots are available for say 5-minute data or something. So every 5 minutes, what is the snapshot of that order book is available.
Okay. Thank you.
Yes.
So I'm just curious. So what kind of behaviors does the bot end up learning? Is it more high frequency trading? Is it more high frequency trading, or is it more long term strategies?
So bots typically do high frequency trading. So they do the trend following, and if the stock is going up, they will basically buy it for and sell it for a fraction of percentage. Okay. Because they are trading in like microseconds kind of a, and that is not available to the retail investors, because for the retail investors typically the quote is delayed by 5 to 7 seconds, and even on the faster even if you have fast internet, still the delay is 5 to 7 seconds, and by that time the price has moved. So we can't as retail investors we can't compete with the deep pockets. So what we are doing is that, can we have our thing is that we'll do only one trade a day, so that we are not bound by this microsecond, picosecond kind of thing. And still, can we do something better? And we found out that we can actually do something better.
Hello. I hope I'm audible and this is visible to you. So now we will do what we are doing. We will do now that we have discussed, but we will do it now live. The documentation for these functions and APIs is available. So this is my API key, and this is my API secret key. I can change my API secret key later on. So without API and API secret key, we cannot create the session. API key is static fix, but API secret key we can change, and combination of both will require to generate a session. So this is URL. At the end of the URL, I have appended my API key. Now I will paste here, and I have to enter my credential. So now I got my request token. So this is my request token. So this is my old request token. Now I am changing it. As I said earlier, the access token is a combination of request token and API secret. So now I got my access token. So this is my access token. So my earlier access token and current access token is same because access token remains same for 24 hours. And in the morning I generated my access token. Okay. So this is now I am connected with the server, and this is my actual trading account. So let me log in into this. Okay, so this is my position, means I haven't initiated any order yet. Okay, and current price of that S Bank is, this is my holding, and current price of S Bank is 21.60. So now I will place an order on S Bank. So I have written the code. I will now change the value. So it is limit order. I am not buying at market price. So you can put your price. If the price meet, then only the that order will be executed. Otherwise, it will not executed. So I place the order, and this is my order ID. Okay, and that my account is independent of this, but order is placed. So I hope you are able to see the one order is created, and status is open because that price is not met yet. Whenever it will met, the order will be executed. If at the end of the day, if the price is not met, then order will be cancelled. No, no. Already your trading account is linked with your bank, and and already I have transferred some money from that bank to that trading account. Yes, sir. Again, there is a function for orders that pulls the information regarding how many orders you have till now. So these are the order. I have placed only one order today. So these are the parameter regarding that only one order. You can represent that information come to you in any format, in graphically or in tabular format. So I have represented in table format. Similarly, there is a function holding. So by using that function, you can pull whatever your trading account is currently holding. So these are some info. These are some stock that I am holding now. So based on your current holding, also you can incorporate your current position or holding data in your trading strategy. So today's position in the sense how many stock I bought and sold. So no stock I have bought and sold today. So whatever we can do using manual trading, that is for every function there is a library is available. You can use that function. So now to access a data, so we can access current data or historical data of the frequency provided by the data vendor. So the smallest frequency is 1 minute for historical data. For live data, we can get the tick by tick data. Means every time the price is changing, I am getting that price. Not only price, the parameter attached with that price also getting. Means if the last transaction is this and this is the price, then how many stocks are sold, bought, all information we got or we get. So there is a function that is code function. By using that code function, I have written here SBI. So it will provide me the current status of stock, SBI stock. No, no, no. Once you took that subscription, it is already attached to your Demat account. So only that algorithmic account is not sufficient, or you cannot open that account without that Demat account. So this is current status of the what we can say SBI stock. Is current price is, there is some parameter that is last trading price, from where you can price. So current price is 609. So before COVID, the price of the SBI was around 200. Again, there are various functions. Now I have pulled only the last trading price. You can also pull the open, high, low, and close price. Then let me show another thing. So now comes with historical data. So this is a 10-minute data of State Bank. Not State Bank, it is index data, that is Nifty. So this is current, this is price of the Nifty. So whatever duration I have mentioned, from that duration is data coming. So for any stock and for any frequency, 1 minute, 10 minute, 5 minute, 1 day, 1 week, that data you can fetch. For the all the stock listed on what we can say National Stock Exchange, Bombay Stock Exchange, and other stock exchange which are controlled by SEBI. Now tick data. Tick data means whenever the price is changing, we will getting the that price and parameter attached with that price. So for that there is a module that is kite ticker. So I am importing that. By using that, I can fetch the live tick data. So every stock has some unique number, and that number is known as token number. So token number is attached to every stock. So one person has asked one question: what is that call or put that expire in what we can say every 3 months? But they have some unique number, that is token. So using that token, you can also fetch historical call and put data also. So now State Bank of India, I am getting the tick data. So price is changing means actually the trade is happening. And I have restricted the data. There are various mode. The current mode is LTP mode. LTP mode means last traded price. So I am getting only last traded price. But there is another mode, that is full mode. Then you will get the entire data attached with that. So you have various options. So based on your logic, you can use this option. So along, not only for single stock, we can fetch data for multiple stock also. We can fetch the data for entire stock listed on the NSE or BSE also. So we can simultaneously, suppose I have a strategy, so I can apply that strategy on the all the stock. Means every time in crossover strategy, there is a signal when there is a cross. So on every stock, every time there cannot be a trading opportunity. So you can scan entire market where the opportunity is present, and you can select that particular stock for that particular strategy. That is entirely not possible using manual trading, because on national stock exchange more than 5,000 stocks are listed on equity only. So this we wanted to demonstrate. There are various functions that you can explore your own. So trading strategy based on your logic only. That logic can involve reinforcement learning or machine learning, or cannot involve that. That will be simply on Monday I will buy, on Saturday I will only sell. Whatever the strategy or logic you have, you can automate it. Thank you. Okay. So whatever the data we are getting, that are coming in the form of dictionary, Python dictionary, so you can store that data and you can later use that data. So this data is coming to me. I can easily store this data in a variable, and later I can use this. Same API, but it is for 30 days only. Historical data, live data. We can write code and our yes. Means I can make a copy of me and I can apply my copy on all the stock in the stock exchanges. No, I don't need to run this. I can means I can apply my strategy. And I can close my machine. Then only it will be executing. So there are various options. You can use cloud or you can use Google Colab. So that all thing is possible. Hmm. Yes, we are doing this from 2019. So if you have any question, you can ask.
I have a question regarding not only on the LLM side. So how do you define your state action methods in using DNS? Because over there,
the states you defined, I think, last 20 days or something. So did you consider any other information, for example, other economic factors or something, while defining the states, and what are your actions? Is just buy, sell, hold, or something else also?
Action are fixed. That would be three action.
Okay.
But we have did many more experimentation. This is our only basic experimentation. There we consider state as a last 15 days price, but that is not sufficient.
Yeah.
So we have incorporated means we represent the state of the environment using various other method also. So what we did, consider this 50-day data, but means number of state will be more. So we cannot use Q learning. So what we did, we apply one clustering algorithm on that, and that clustering algorithm will divide all the state into some finite group.
I didn't get it.
Means suppose this is a cluster, and I am to cluster I am representing the stock market using various what we can say parameters, and many of the parameters are continuous. So my clustering algorithm means our basic thought is that there are patterns and there are history, present and future, and history is going to repeat. So in stock market also this is happen. So I represent the stock market by using some parameters, some continuous, some discrete. I provided that parameter to some clustering algorithm, and it is providing me some finite group. Let's say three group. So if first group, second group, and third group. If it activates first group, I will buy. If it activates second group, I will sell likewise. So we can uh, encapsulate many information into that, but we are not considering that what you said fundamental aspect. We are considering only the data driven aspect. So this you cannot use this strategy for long term. Means buy today and sell 1 year later. This is not for that.
So this clustering you are doing on what? 15 or 50 days kind of data? The clustering you said.
No, actually we wanted to use reinforcement learning, and in our basic model we represent the state by using 50 closing price. So that state space is continuous. So we cannot use Q learning. So we on that we use clustering algorithm, means that continuous state space we are converting into discrete state space.
So this 50 keeps on changing by a window, right?
Yes. So it's just like sliding window.
Yeah.
So number of state will be infinite. So put a clustering algorithm and they will map to its some
So
clusters.
algorithm on what size of data? That's what I'm asking. How much?
What was the historical data?
Yes, consider for building this cluster. That's what I'm asking.
So we did various experiments, but in our basic experiment, daily data and it consists of 18 years.
18 years.
So first 5 years for training and later for testing. But in reinforcement learning do the online learning. Means every time the policy is updating. So that is very much matching with our stock market trading aspect, because in stock market also we sequentially take the decision.
And the output of this clustering algorithm is the input to your DNA.
Sorry.
The output
Output of that cluster is a we took that as our input for the training strategy, and what we presented here, that clustering approach provide better output as compared to this what I presented here,
okay. So
because more information we are incorporating.
so the approach which you just showed
It is very basic.
okay. Okay. You are not currently using deep neural networks to formulate this direction.
No, we use, but what we presented today was basic.
Okay.
We also modified that.
Okay.
So today our aim was to present a product. In the sense that everything is available. Like you have historical data. You have all sorts of algorithms that are possible that you can use. You know that. You have
What is the definition of episode here? Like if you're using deep learning, right? You may have to generate data to train that deep neural network for the policy. So you have to have some episodes. So how do you define an episode there now?
So what we are doing, suppose we are collecting data. So for a state, we apply an action, we will get a reward, we will also get next state kind of stuff. That entire tuple we are storing. We are storing and we are collecting that data in a buffer. And that data we are using to train that neural network.
So you may not be training for each tuple, right? You may store it for one episode or something and then go for the training. But what I'm asking, how do you define your episode? So you want to update your deep learning model, not for
So
every tuple you are updating, right? Yeah.
So what we did for training stuff, suppose there are n days. So that is episode for what we can say while training. While training and testing, we just moving is just like sliding window. We are moving our window one position. You can say rightward. So that will incorporate the current day also. But every time we are, if we don't update that neural network every time, that will not be online algorithm or that will be against the reinforcement learning. That's why we are updating. But sometimes if the larger data, we are reducing the size of that window so that it didn't take much time. If the trading decision is only one in a day, then that is okay. If the trading decision I have to take within a 5 minute, then that matters. So for training, you can take larger window. For actual real time, you can take shorter window because the current price is based on only recent time, recent prices only.
So our goal was to do it on a basic desktop or laptop. So our goal is to define everything for retail investors, assuming that he or she doesn't have a very high infrastructure. So whenever the data was large, our window size reduced so that we can do it on a basic machine in a decent enough time. This was deployed in Zerodha. Yes. Yes.
Since it works on live data, what is the runtime injecting that?
Yeah, so our thing is that we do one transaction a day. One transaction a day. Yeah. Yeah, so.
And just a clarification, how often do you retrain this model? So how does this whole strategy works?
What is, how often do we retrain the model?
We have various models and we mostly trade for like practical trading. We generally use the traditional models which are not based on that machine learning or reinforcement.
So we use this machine learning models to generate signals.
Okay.
And then these signals are used for traditional models. We basically reinforce that with the traditional models and then trading based on the traditional models, which are very fast. Basically moving average and area.
Earlier I said for market scan, given a set of stock, so which stock is selected, which stock we have to pick today. For that we use that machine learning and reinforcement based strategy. Once we selected the stock, we generally use when to enter and when to exit. We use that what we can say data driven strategy that not driven by machine learning. So half part we use machine learning because if we use entire part we use machine learning and the performance was not to.
Actually, it delays the decisions.
So we have
So
to
assuming
use,
that we are doing on this laptop.
So we basically inference time is the important.
Yes.
if we mix both the approaches, then performance good.
So I think we are done. So thank you all
Thank you.
for coming and.
Okay, so thank you to speakers for the tutorial. So we'll have the breakfast in the first floor. Maybe in 5 minutes you can just come. Okay. And we have the next tutorial starting at 11.